Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The yen strengthens and Japanese stocks fall as traders remain on alert for market intervention. Gold hits $5,000 an ounce for the first time, and silver rallies as global upheaval fuels haven demand. Plus, Democrats threaten to block a U.S. spending package unless funding for Homeland Security is stripped after another killing in Minnesota, raising the risk of a partial government shutdown. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, keeping a close eye on the domestic developments within the U.S., another killing in Minnesota, and obviously the impact that could also have on the potential for a U.S. shutdown as we barrel towards that Friday deadline. So something to think about, and possibly one of the reasons why S&P futures are leaning towards red today, down 0.3%, minor pullback for the week last week as well. So leaning towards another negative start. We do have the Fed coming up this week. Unlikely they do anything on interest rates, but still something to watch out for on Wednesday. Gold through $5,000 for the first time ever, up 1.7%. I mean, just stunning moves in gold, up 9% in the past week. Silver is up 15% in the past week. And again, a lot of money keeps pouring into precious metals because of, you could say, geopolitical uncertainty, because of the quote-unquote debasement trade, maybe the move away from U.S. assets and so forth. We'll talk more about that on the show. But gold through $5,000 for the first time ever. That is significant this morning. Brent also regaining a little bit of ground lost, up 0.2% today, just shy of $66. And then we have dollar yen. A lot of focus on the yen this morning. So we are trading 1% firmer versus the USD, a significant move in the last 24 hours or so, on expectations that there may be some form of an intervention nigh. So something to think about. We're going to discuss it in just a few moments with Mark Cudmore. Switching over, though, the reason why the yen move is so significant and obviously specific to Japan is because the dollar itself has been on yet another downward trend. I mean, that was the big theme for 2025. We saw the pullback of the USD to around 10%. It is continuing in 2026 as well. So that move lower for the greenback continues this year and doesn't seem that there don't seem to be any signs of it abating, which is interesting if you put the dollar yen move into context, and it tells you specifically that it's all about intervention as opposed to the dollar move. So something to think about there. All right, for more on how markets are faring, Bloomberg MLive executive editor Mark Cudmore joins us from Singapore. So lots to unpack today. I was just talking about the move in dollar yen. And obviously you have the story of dollar weakening, but you know the yen has so far up until Friday been on a weakening trend versus the USD as well. But now there's a lot of talk about yen intervention. So walk us through it and what we could maybe expect, Mark.
Yeah, good morning. Yeah, you're right. The yen is very much in focus. And as you kind of explained there very clearly, it's in focus not just because of the risk of intervention, but because actually we're in a broader dollar decline. And the turnaround of the yen story, which is kind of the one missing component, is really helping intensify that dollar weakness, which is broad-based and kind of global. As for dollar yen itself, it's unclear if we'll actually get intervention. You've got to bear in mind that dollar yen is now trading about 5 yen below where it was on Friday. So it's trading around 159.20 and now it's trading around 154. So we've had these rate checks, which are normally a precursor to intervention. But if the market gets its own momentum, well, they won't need to physically intervene. So it's more that, hey, we're giving you a warning that if dollar yen gets back up there, we might actually come in and sell quite aggressively. There's a chance that this gets its own spiral even without that help, though. As we discussed, the dollar weakness is based on fundamentals of the fact that it's a country with a current account deficit, large debt problem, and it's still an expensive currency on PPP basis. And yet, you know, this is a country which is undermining its trading relationships around the world. So people are looking to sell the dollar regardless, and now they've just been given another reason. They've been given kind of unofficial state support to do so.
Yeah. Pretty remarkable move in the USD and also the yen over the course of the weekend. Mark, but it's not just the dollar and currencies we're watching today. Precious metals, a couple of minutes ago, I was talking about gold breaking through $5,000 for the first time. Silver, huge move in the past week as well. What's going to derail the momentum for precious metals? I thought we were due for a bit of profit taking.
Yeah, the moves are incredible. They really are just quite phenomenal. Now, it plays into the same dynamic that we were just discussing. People are looking to sell out of the dollar. They're looking to kind of quit US assets, but they're looking to diversify away from the dollar. There's not really many standout candidates amongst other fiat currencies, and there's only so much you want to put weight into those kind of various other currencies, which is why they're going to other assets. And precious metals have been a real kind of beneficiary of that over the last couple of months. Now, the moves have gone really quite crazy. You've mentioned gold above $5,000, and that's probably the more valid one. Silver is his high beta junior cousin. It's more than doubled in the past 2 months alone. It's up about 55% year to date. It's trading about 13 or 14% above where it was on Friday morning. Over 5% higher today. It's really quite extraordinary moves that we're seeing in silver. It's hard to kind of fight this because the fundamental reasons are there, but the fact that moves are getting so crazy shows that we're starting to get a decline in two-way liquidity, and this just means that fresh buyers are coming in at very elevated prices, which means that if we have a catalyst for a pullback, it could be quite violent, even though the move higher has been logical. Now, what would be that catalyst? I think that the only real reason we get one is if we get enough risk aversion elsewhere in markets, then people will start selling down some of their winners as well to cover their losses. So if you do see stock market declines accelerate this week and really intensify, that's when you suddenly might see precious metals temporarily at least fall out of bed quite violently.
Yeah. So sort of a broader pullback for portfolios in general. Mark Cudmore, Bloomberg MLive executive editor, thank you for breaking down some of the two major moves this morning in markets. Well, let's move on. A global investment firm, Sixth Street, is opening an office in Abu Dhabi later this year as the firm sees improving capital markets and a pro-business environment in the region. Joining us now is Alan Waxman, co-founder and CEO of Sixth Street. Really good to have you with us on the show. And obviously, your plans to open up an office in the Middle East are big. But I do wonder, in the broader context of this environment for global growth, whether you're coming here because of the attractiveness of growth and the high growth outlook. Why are you opening up an office here? Quite simply.
Great question. So we've been here for 17 years. We've had partners through really since the founding of the firm. I think right now it's just a really exciting time. The governments have done a great job, as you say, making a pro-business environment, but also diversifying away from the oil part of their economy. And front and center for us is the consumer. The demographics is just really exciting for us. And at Sixth Street, we're a $130 billion plus investment firm, multi-strategy. So we have businesses across real estate, infrastructure, growth, tech, sports, everything. We just think there's going to be a lot of ways for our investment strategy to be applicable in the region. And
is the incentive because you want to be closer to the sources of capital, or because you've identified investment opportunities in the region?
It's two things. So one, look, we're already close to the capital. We have some of the largest investors in the region as investors at Sixth Street. But I think what's exciting and really goes back to leadership, and we brought on recently Julian Salisbury, who I think is a former colleague of yours, and also Stuart Wrigley, both partners from Goldman Sachs. Both Julian and Stuart have been basically investing in the region for 20 plus years, and really one of their key strategic priorities at Sixth Street is really building out our GCC region. So we wouldn't be doing that if we didn't think there were investment opportunities across all of our platforms.
Okay, so consumer is one thematic.
Yeah.
How are you looking to engage in that sector?
The way we always do it. Ultimately, everything starts for us with one deep understanding of the sector, but also relationships. So it starts as we build our team, we open up our office. It's building relationships in the region. We obviously have a lot of existing relationships, but we also have a lot of knowledge. You think about sports, we're invested with some of the largest sports franchises in the world, the most valuable sports franchises. We're heavily involved in the restaurant space, the healthcare space, health and wellness. I've been out here. I was up early this morning. There are a lot of people running around, being active. Like we've owned fitness gyms in the United States. So there's a variety of places as it relates to the consumer that we think are really going to be exciting here in the region.
Yeah, are you going to get the companies of a large enough scale, though? I mean, you do manage, over $125 billion, and I just wonder in this part of the world whether you can actually get the type of scale that makes it worthwhile.
Yeah, great question. I think, look, there will be those opportunities, and at Sixth Street, one of the benefits of our platform, we have the ability. We're one of the few platforms in the world that can consistently write multi-billion-dollar checks in a very flexible way. We have, I think you know this, but our TAL vehicle is the largest, it's a $30 billion vehicle, the largest opportunistic private capital vehicle in the world. So I think there's going to be opportunities as it relates to that. But you're right, some of the opportunities will be at the mid-stage, and that's why we have a mid-stage growth fund.
Yeah.
And applicable, there might be opportunities there. But I think it's going to be both. But again, we're long-term minded, we're relationship focused. And again, like we do in every region we approach, we do it methodically, and we take a long-term view. But there's going to be, I think, opportunities across really all our platforms.
Yeah, and I just wonder, if you look at the performance of private assets last year, it was a remarkable year. For private credits, those spreads came in a lot. Private equity, I guess, still maybe less monetization. That's something specific to that part of the industry. But I do wonder, looking ahead, whether investors have to expect lower IRRs in the future simply because valuations are higher.
Yeah, so a couple pieces to that. So first of all, as it relates to the largest part of private credit is direct lending.
Yes.
We were pretty vocal last year, actually, I think at a Bloomberg conference last year about how we thought there'd be compressing yields in the direct lending space. I think it's a little controversial and provocative at the time, but as you see it's playing out, it's really playing out that way, and we think that will continue. The other part of the direct lending, which is a really big piece, is that the amount of wealth capital coming in, where it's inflows investing, where capital comes in the direct lending space, and regardless of whether it's a good time to invest or not, some of these vehicles have to deploy capital. And again, I think the question is that does that really does that go with being an investor? I think that's a question. So I think that's something to watch for in the direct lending space. On the private equity space, and it's not just corporate private equity, real estate private equity, infrastructure private equity, the biggest story there is just there's about low trillions of dollars. Some people think it's $3 trillion. We think it's closer to like $4 or $5 trillion. I've really stuck private assets. And I think when you think about that opportunity, one, it requires solutions. It requires not off-the-shelf investing. It really requires artisanal or customized solutions. That's going to be probably the biggest opportunity in private equity.
Yeah. And I do wonder, again, how it relates back to this part of the world, because you need to have those liquidity events, right? And obviously there's been a big focus on capital markets, on IPOs, and how much of your decision to invest is going to be based on the ability to capture some of those liquidity events at some point in the future? Yeah,
so different, what's interesting, if you go to the developed markets, so you think about US and Europe, they're more mature markets, so the capital markets are more developed. So some of these issues where people have existing portfolios, they're having trouble selling assets, or the IPO market's been slower for exits, or the M&A market. What's interesting here is this region is in the great part of the curve, and it won't be linear, but it's got so much wind behind its back. And again, that's the reason why we've brought on two very senior people, our partners for the region, and why we're focused.
So you are based out in Silicon Valley. So you're right in the heart of the tech ecosystem. And again, one of the other conversations that we were having also in Davos last week is whether there simply is too much hype in this space because of the sheer numbers that are being thrown around on CapEx spending. And I've spoken to both sides. Obviously, people in this space said there's not enough money going in, and then others are a bit more skeptical. But I do wonder, from your vantage point, whether you think there are underpriced sources of risk right now around AI.
It depends. There's a lot of parts of the ecosystem, but I think, like you said, one of the benefits of being the type of investor we are, living in the heart of Silicon Valley, there's not many investors like us that actually reside there. I'm friends with a lot of these people. I live with these people. But the one thing that's most interesting about Silicon Valley, if you were to go back over the last 48 months ago, the word power generation was never part of Silicon Valley vernacular. Now, every time I talk to any of my friends in the Valley, all they want to do is talk about power generation, which we've been investing in really over the last 20 years. So I think that's kind of interesting. I'd say a couple things. So on the demand side, when you think about just the hyperscalers, they have significant demand for the foreseeable future. Obviously, they've come out with projections for 2026, but even beyond that, on the demand side. So I think that's going to continue. I think the constraints are to watch out for is one is obviously power. To procure power, it's taking longer and longer and more expensive. So that's a constraint. Obviously, there's a question on chips. There's also regulatory. There's increasingly not in my backyard across certain parts of the country. And again, this is more of an issue for the U.S. and some other parts of the world that can just build as many power plants as they want as fast as possible. So I think those are the real constraints. And then the other thing is for almost except for Meta, all of the sort of demand side from the hyperscalers has been reinvesting unlevered free cash flow. And Meta obviously did their off-balance sheet financing, but we are just at the beginning. They haven't even started to tap that off-balance sheet financing, some of the other hyperscalers. So as it relates to the compute side, it will not be from the hyperscalers pulling back. It might be their shareholders saying, maybe slow it down. That will be interesting to watch.
Like an Oracle
but there's a lot of demand. Just think about every consumer, every company is going to want to be accessing AI. That doesn't mean there's not going to be problems, but there's significant demand still.
Yeah, and again, as one of the byproducts of that, utilities are interesting again.
Yeah.
Alan, thank you so much for joining our show today.
Thank you.
Alan Waxman, co-founder and CEO of Sixth Street. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, Democrats demand a block on funding for Homeland Security after another U.S. citizen is killed by immigration officers. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. Outrage is growing in the U.S. after Border Patrol agents shot and killed a man in Minneapolis on Saturday. Senate Democratic leader Chuck Schumer has vowed to block a massive spending package unless Republicans strip funding for the Department of Homeland Security, DHS. So for more, Bloomberg's Palash Pence joins us. Okay, first of all, Palash, talk to us about the possibility of a shutdown heading into Friday.
Well, it looks like the possibility has increased dramatically over the past few hours. We're only 2 months removed from what was the longest shutdown in U.S. history, and now we're back here. What's happening now is that the Senate needs to pass annual appropriation bills to keep the U.S. government running. And while they have passed some of them, so a shutdown wouldn't be total like we had in the last instance, there is a serious holdup over a bill that includes funding for the DHS and through that ICE. And that's something that the Democrats say they do not want to do right now. So what they're trying to do is they're trying to split this part of the funding off of the overall larger bill. The Republicans, of course, don't want to do that. So right now they are on a collision course with the funding only now available until the end of the week. So they have a very, very tight window to come to an agreement and figure out how to move forward.
And of course, let me just bring in how the events, very disturbing events in Minnesota, actually tie in to the discussion around the shutdown and possible shutdown.
Yeah, that's right. And that's the issue that's energizing the Democrats right now. And that really just goes to show how the conversation, the political climate around immigration has changed in the U.S., partially as a result of these images that we have seen coming out of Minnesota and this very disturbing news that we got over the weekend. Again, it sounds like immigration, which has been a very sort of positive issue for the president and for the Republicans until now, has been changing the perception for the entire U.S. And now the Democrats seem to think that that's a good issue for them, that the public opinion is turning to their side. So this is giving them leverage. And this is also a reason why we're seeing some Republican lawmakers becoming more uneasy with what's happening in Minnesota and more broadly with the ICE immigration operations. So we are seeing a change in the political conversation. And that's part of the reason why a shutdown is suddenly another possibility here.
Back on the table again. Yeah, Bloomberg's Palash Pence getting us up to speed on the latest there with the U.S. domestic politics. Thank you so much. Well, coming up, trilateral talks aimed at ending the war in Ukraine wrap up in Abu Dhabi. We have all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. 2 days of talks between U.S., Russian and Ukrainian negotiators aimed at finding a path to end the 4-year war wrapped up in Abu Dhabi over the weekend. Ukrainian President Volodymyr Zelensky says progress has been made during the talks, while the U.S. described the talks as constructive. Joining me now is Greg Sullivan, Bloomberg's Russia economy and government editor. Well, they seem to be presenting the talks as having been constructive over the weekend, but there are other accounts suggesting that once again, the topic of territory really got in the way of significant progress here and a breakthrough.
Absolutely right. On the one hand, the talks were interesting because they sat face-to-face, not through intermediaries, and one of the biggest takeaways has been that they actually agreed to meet again, coming on Sunday.
Yeah.
However, as you said, major sticking points remain, and one of those is territory. It's been a major outstanding issue, and neither side has shown much willingness to back away from their demands.
What exactly is Putin asking for?
Well, Putin wants for Ukraine to cede certain territory in the eastern Donbass region that he has not been able to take militarily, but that they've been fighting over. Kiev, for its part, is seriously concerned because it's a heavily fortified area, and they worry that they would cede some of their defenses. And also the issue of sovereignty. It is land that they control and have continued to control, and Russia, again, hasn't been able to take militarily, but that's the demand.
And again, the precedent for the future, if they cede that territory, who's to say that in a couple of years' time we won't be in a situation like this again?
Absolutely. And that brings up another point, which is the security guarantees that they've been negotiating. For Kyiv, that's very important. They do not want Putin to just simply restart an invasion down the line. So that has been another issue that has come up in
Greg,
these talks.
what do you make of President Zelensky's speech in Davos and the fact that he really lashed out at Europe?
Certainly. There was obviously very visible frustration in that speech. He accused Europe of talking but not always acting. In some ways, it also sought to align him more closely with President Trump, who also has been very critical of Europe lashing out. So in some ways, that speech could have been a signal to Trump that he is still aligned with him, keep the U.S. on his side. But there's also no doubt frustration as Ukraine continues to be bombarded by Russia in missile and drone attacks. There are many people without heat and power in the middle of winter. So there's a lot of frustration that was on.
Yeah, I think people were surprised at the tone that came through from Zelensky in Davos last week. Greg, thank you so much for the overview on how those discussions in the UAE, that's right here, went over the weekend. Greg Sullivan, Bloomberg's Russia economy and government editor. And let's take a look at how markets are faring as we head into the first day of the trading week. And things are pointed down. So we've got S&P futures down 0.2%, NASDAQ down 0.3%, a close eye on the tragic events in Minneapolis over the weekend, and the real possibility now that we may be headed to another U.S. shutdown on back of Democrats resisting to sign on to a spending bill unless there are modifications done to the Department of Homeland Security. So big theme that we're going to be tracking throughout the course of this week. And we've also seen a lot of money go into safe havens this morning, not shown up on the board, but I do want to mention that gold is through $5,000 for the first time ever. Now, coming up, Saudi Arabia is postponing the 2029 Asian Winter Games. We have more on what this means for the kingdom's ambitions to become a major sports hub next. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. The yen strengthens and Japanese stocks fall as traders remain on alert for market intervention. Gold hits $5,000 an ounce for the first time, and silver rallies as global upheaval fuels haven demand. Plus, Saudi Arabia and the Olympic Council of Asia delay the 2029 Winter Games that were set to take place in the Neom ski resort. It's just gone 9:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. A bit of a pullback for markets this morning. S&P futures leaning towards negative, down 0.2%. A similar move for NASDAQ as well. We saw sort of a lackluster end to the week last week for Wall Street. But this week, really, the attention is focused on political developments within the U.S., domestic, the killing once again in Minneapolis, and also the fact that many Democrats are now saying that unless there is a revisit of Department of the Homeland Security spending, then they're not going to subscribe to the spending bill coming up. And it is a deadline this Friday, which means we may be on track for another U.S. shutdown, as we were just talking about with our reporter prior. So bear that in mind. That's going to sort of cloud over sentiment, I think, for the rest of this week. We do have a Fed meeting this week as well. It's probably going to be a bit on the back burner because they're not expected to cut interest rates, but still language around the U.S. economy will be watched very closely. Gold, take a look at where we're at, through $5,000, so up 1.5% today. Money pouring into precious metals for both gold and silver, up 8%, 12% respectively over the course of the last couple of days. So that theme remains intact in an environment of geopolitical uncertainty. Brent regaining some ground as well. We're back up to $66 a barrel. So that's quite the rebound from where we were, say, a week or two ago when we were trading very closely to $60. So rebound for oil in sight. And then dollar yen, all about intervention this morning. The yen is trading 1% firmer versus the USD. And let me just switch over to flag that this is an exception today because of the talk around potential intervention. And this is actually something that the Prime Minister is just talking about right now. Some headlines are crossing the wire. So we'll talk about that in just a moment. But as you can see, the trend for the dollar, for the most part, since the beginning of 2025, has been one of softness. And that continues. There's no sign of that abating. The dollar is risking multi-year lows at this point. Okay, let's talk more about some of the price action in Japan and beyond. Winnie Su was in our Hong Kong studio. Winnie, talk us through some of those headlines that have just come through now from the Japanese Prime Minister Takaishi.
Yeah, morning, Jemana. So you can see that basically it still is that weaker dollar story that is affecting Asian markets today, as you see how that's supporting the overall Asian market with the MSCI Asia here up about 0.5%, and also Bloomberg's Asia Dollar Index up about 0.5% as well, with the won leading gains. But like you mentioned, it is a lot about the actions in Japan. And here, in fact, as you just pointed out, the Japanese yen actually strengthening 1% and to that 154 level against the dollar. And it's pretty much the strongest level since November. Yes, we have all these comments from Takaichi, but also, earlier she was talking about that the government is ready to take any actions against speculative moves. So that is also providing some support for the Japanese yen. And with that strong yen, it's also adding more pressure to the Japanese stocks, especially with exporters such as Toyota Motor, and hence we're seeing topics here down about 2%. Now just flip the board and take a look at some of the sectoral moves when it comes to that weaker dollar trend. You just mentioned, yes, we are also very closely watching how the precious metals are trading right now. But interestingly, with the MSCI materials sector here up more than 1%, it's actually taking it to its highest since 2021. Korea Zinc here up more than 16%. So on that back of a weaker dollar, stronger precious metal prices. Back to you, Jemana.
Winnie, thank you so much. Winnie Su in Hong Kong. Let's bring in Ayesha Tariq, co-founder of Macro Visor. Once again, Ayesha, lots to talk about as we think about the setup for this week. Firstly, your thoughts on the potential for yen intervention and the impact that could have on global markets.
Good morning, Jemana. So interesting story this morning. I mean, I think we won't see a hard intervention over here because we're already seeing the comments, helping the Japanese yen. So I doubt that they're going to need to do actual intervention at this stage. But I think with the dollar being depressed, what we're seeing is other markets doing well. We're seeing money going into gold. And overall, I think the dollar continues to remain depressed because of the uncertainty in the U.S. and the global geopolitical situation.
Yeah. How are you feeling about the domestic political situation in the U.S. and the real possibility that we're heading towards yet another U.S. shutdown at the end of this week?
So I think this is going to be a disaster. I mean, what's happening in the U.S. right now is very, very sad, unfortunately. But I think with the Democrats taking a bit of a stand, we may see some changes come about because nobody wants another government shutdown. What we saw over, towards the last end of 2025 really rattled markets, and it actually put a lot of pressure on decision making, on, data outputs. And I don't think anyone wants a repeat of that. So let's hope that this doesn't happen. But then again, we have an administration where we can expect the unexpected.
Yeah, that's one way to put it, which also means that there is this question of uncertainty in the air, especially around policy. And we are in a very big political year in the U.S. heading into the midterms. What do you make of this renewed discussion around the quote-unquote sell America trade this year?
That's right. So this term has been making the rounds. And when we look at, the Sell America trade, most people are thinking about equities, right? Because that's the market that's bigger, more flashy, let's say, because of the AI story. But honestly, I don't think the Sell America trade is really for the equity market. It is rather for the bond market. Because when we look at the equity markets, what's driving the equity markets, the AI story, still is on good footing. And we expect 20% growth year on year for this quarter. But when we look at the bond market, that's where things start to get scary. And we are seeing, steps being taken to replace U.S. Treasuries because people are losing faith in U.S. Treasuries. They're substituting it with gold. We can see the price of gold go up. And all this fiscal spending as well in the U.S., planned fiscal spending, is likely to now start coming towards the long end of the curve, which means yields start to go up. Now, while this should be a good thing, it also adds to the debt of the U.S., which means it no longer functions as the safe haven that it once was. So lack of demand for treasuries also means lack of demand for the dollar. And so again, we're seeing that in the depressed pricing of the dollar.
Okay. Does this environment, the backdrop of a weaker USD, that therefore mean a repeat of the playbook of 2025 and that emerging market assets can actually perform quite well?
I do think so. And I think, we're looking at a situation, I was looking at some charts actually, and we're looking at a situation where, yes, emerging markets have done very well. But I think, this is also the time where it could break out further. So we're poised to see another rally for another leg higher.
Yeah. How does that fit into the rally that we're seeing in precious metals? It seems to be one game in town right now. And because of this uncertainty that we speak of, either on back of U.S. politics or broader geopolitics, precious metals seemingly are the main beneficiaries. What changes that?
I think that's a great way to put it. It is the only game in town right now. And I don't know what exactly changes it, but look, if we look at what's driving it, which is uncertainty, so I guess when uncertainty starts to pull back, that's when we may see gold start to pull back as well. But at this stage, I think people have become so fond of putting their money in gold and silver and the other precious metals as well. Palladium, platinum, they're all doing quite well. Copper is another one, I think, where money can move to. But given that we actually have demand for many of these precious metals as well, so there's underlying demand coming from the data centers, from the expansion of AI, I think we could see, potentially a good floor under prices. So maybe not at 5,000, but I think we could see we don't see it going back down to, let's say, the 2,000 level anymore.
Yeah. Ayesha, always good to chat to you. Thank you so much. Ayesha Tariq, co-founder of Visor. Now, Saudi Arabia and the Olympic Council of Asia have agreed to postpone the 2029 Asian Winter Games. They were set to take place at a desert ski resort in the planned Saudi megacity of Neom. For more, Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, joins me now. Well, it seems to be confirmation now that the Winter Games will not be taking place in that ski resort in Neom, building on from some of our own reporting a couple of months ago. What were the reasons cited?
So I think the same problems we've seen across all the gigaprojects, so not all of them, but certainly many of them, where they start with this hugely ambitious vision. They start building, they realise there's going to be massive cost overruns in some cases, just in terms of the topography and the engineering required to do it. They can't do it in time. So we knew that we're sort of running into issues around this because, again, this is an incredibly ambitious project to build basically a ski resort in the middle of the desert. And yes, temperatures do drop there in the winter. Yes, there is some natural snow, but ultimately they were going to have to build this 3-kilometre-long lake to provide the water for the artificial snow. And I just don't think they could do it in time. So I think the real surprise here is that they've postponed it. We knew as of several months ago they were talking to China, they were talking to Korea to see if they could swap the dates. But this looks like they've just postponed it, at least for now.
Postponed or abandoned?
I mean, the language is postponed. They said they're still going to do some winter games, and there is already infrastructure there. You know, they have started building. So with a few more years, maybe they can do a scaled-back project. Yeah. But ultimately, like all these giga projects, they're kind of stack ranking them in terms of priority and importance.
Yeah, I will say I was on a panel last week at the World Economic Forum, and I spoke to the finance minister. I spoke to the Minister of Economy and Planning. And there does seem to be an evolution of some sorts of Saudi 2030. It's been almost 10 years to the day that it was launched. And what they will say is they started out full throttle, and now they're really a lot more focused on execution and almost fine-tuning the spending and where it's going in the economy. So perhaps these types of re-evaluations of some of those more ambitious projects are what we can expect in the next year or so.
No, and they've had praise for that. I mean, if you look at what the big international banks are saying, you look at what the IMF and the World Bank are saying, you know, they are getting praise for being just pragmatic. You know, there isn't an infinite pool of money. They have their priorities, and those priorities have changed over the last decade, and so it's natural that they evolve with them. Nonetheless, you know, if you agree to do something in advance and then you can't deliver on it, you know, that is certainly awkward. But again, you can absolutely see the way they're thinking and what they need to prioritise right now.
Yeah. Stuart, thank you so much. Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Well, staying with Saudi Arabian developers' shares jumped as the kingdom began implementing new laws allowing foreigners to own local real estate assets. The Tadawul Real Estate Management and Development Index rose, with every one of its members gaining. The new law allows non-Saudis to acquire land and own residential, commercial, agricultural, and industrial properties, including on the holy sites of Mecca and Medina. Several European airlines have suspended flights to and over countries in the Middle East as tensions rise between the U.S. and Iran. Air France and KLM have canceled flights to destinations including Dubai and Tel Aviv, with KLM avoiding airspace over several Gulf countries. The disruption followed comments from President Donald Trump saying the U.S. has deployed naval assets to the Middle East. And coming up, President Xi's military purge is deepening, with China now investigating its top general. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. Chinese President Xi has moved to probe his top general and one-time ally Zhang Youxia. The investigation comes after the Wall Street Journal reported that Zhang was accused of passing secret information about the country's nuclear weapons program to the U.S. For more, we're now joined by Bloomberg's Alan Wong. Alan, really fascinating development over the weekend. What do we know so far about Xi's move to probe or possibly remove his top general?
Yeah, this was a stunning development in the Chinese military. In fact, this might be the most shocking change to the Chinese military in almost half a century. We're talking about a general that's not just any general or any member of the People's Liberation Army. We're talking about the most senior general in the Chinese military. And he's second only to President Xi Jinping himself, the commander-in-chief. So over the weekend, the Chinese government announced that this general is being accused of corruption, along with another member of the top decision-making body of the Chinese military, the Central Military Commission. So those two generals were effectively removed because the investigations usually turn up something incriminating in the Chinese party system. So that leaves only two members at this body that controls, by some measure, the world's largest army. What we know about the decision to remove them too is that officially they said that it's because of corruption, and also there have been some official media reports saying that those generals, they try to create cliques within the military and undermine the authority of President Xi Jinping. But there have been also other third-party reports, including the one that you mentioned by the Wall Street Journal, saying that Zhang was found to have passed on secret information about China's nuclear weapons program to the United States. So obviously that would be a massive offense, and there will be a lot of implications, and there will be people around him that will be investigated for any leaks to the U.S. military, to the U.S. government. But that hasn't been verified, and the report itself said that cited the information as coming from a briefing to other officials, and that those briefings may not cover the entirety of the truth. So that is just leaves us in pretty much where we started, because we really don't know that much about how the Chinese military operates, and but we know that there'll be important questions that this raises.
Yeah. Okay, so a lot of this, I guess, is around the consolidation of power. But looking ahead, is it going to have any implications on, one, succession, and two, possibly Taiwan as well?
Yeah, this is perhaps one of the most immediate paradoxes coming out from this purge. The most intuitive take is that with the top military body down to just 2 members from 7, it means that the top ranks of the Chinese military is now in disarray, because without a top leadership, how could you run a military of that size? And so the theory goes an invasion or military operation against Taiwan will become less likely. But we've also had analysts saying that because of this apparent sign of disarray, the Chinese military would feel compelled to do something to show that it is ready and that it's not just paper tiger. So honestly, the opinion is split, and there's no one who truly knows what the Chinese military is going to do next in terms of Taiwan. And in terms of succession within the Communist Party, Xi will now have to find people that he can trust and people that have the capability to fill those vacancies. And in 2027, late next year, we'll have the succession for China's party leader, and people widely expect Xi to continue to be the party's leader and securing a 4th term. And Zhang, the general that was removed, was seen as one of the few people who actually had the status to challenge Xi's power. But now with him being investigated, I think it's getting clearer and clearer that Xi has absolute control over the top ranks of the party.
Yeah, in case it wasn't clear before. Bloomberg's Alan Wan, thank you so much. Well, coming up, South Africa's finance minister says he's confident of striking a trade deal with the U.S. More from our interview next. This is Bloomberg. South African Finance Minister Enoch Godongwana says he's confident the country can reach a trade agreement with the United States. Speaking with Bloomberg's Francina Kwa in Davos, he said both countries are actively engaged in negotiations.
We are engaged with the USA on trade and tariffs. We've had some time where we were not sure whether we're coming or going. But over the last 3 months, we've been able to table proposals on the tables. They've been able to table their counter proposals. And we're engaged in those negotiations where I'm not at liberty to divulge the details of the negotiations.
But are you quite confident that there will be an agreement in the next quarter, in the next 2 quarters?
I'm quite confident that we will have a deal with the United States of America on the trade front.
Minister, how would you describe this Davos?
Davos is an important institution in 2 respects. The first one, there's a lot of the side events. Some of them provide useful information, which we attend. But the second thing is the ability to meet a number of people and network. That, to me, is quite critical, because some of those people you would have needed to travel to a number of different countries. You find them in one place, and in that respect, you save cost. So this it's a useful environment.
Away from geopolitics, it was a lot about AI. Yeah. How do you see AI changing your economy?
Obviously, AI is quite a critical instrument in changing the economy. The disruption is going to fundamentally change how industries operate. And in that regard, all countries have got to begin to use the technology.
Yeah. And Minister, I mean, we've spoken to a number of ministers, and there's always this tension about, balancing the need to press ahead with fiscal consolidation, whilst at the same time scaling up public investment to support growth and maybe spend a little bit more for the AI transformation. How do you see that balancing act?
Just fiscal consolidation is a necessary but insufficient condition for growth. But it is necessary. Without fiscal consolidation, it's difficult to achieve all other associated growth-enhancing policies. In that respect, there's that tension. We have got to maintain fiscal consolidation, but at the same time, parallel to that, drive some growth-enhancing reforms.
Is it trickier than before because of the need to rethink growth?
It's trickier in the sense that a number of kind of puzzles in the game. We've just talked about AI. There's geopolitical risks. There's a whole range of other things which influence how you respond, how you navigate the landscape.
That was South African Finance Minister Enoch Godongwana speaking to Francine on the last day of Davos. Now, a look ahead for the setup. This week, futures are leaning towards red. It looks like it's going to be a day of negativity for Wall Street. S&P futures down 0.2%, Nasdaq down 0.3%, keeping a close eye on the possibility of a potential shutdown once again towards the end of this week on back of developments in Minnesota. And, of course, keeping close eye as well, not shown here, on the possibility of yen intervention is what they're calling it. So the possibility for Japan to intervene, Japanese authorities to intervene in the currency because of its recent weakness. So those are a couple of themes we're watching out for this week. And of course, the Fed is on Wednesday. Don't forget about that. But that is it for our show, Horizons Middle East and Africa. I'm Johanna Bersetchi back in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.